For example, like in banks, there is a cashier, right? Like a bank, there is a cashier who counts the cash all the time. So
I think this is like a shift. They always change.
no, that is called job rotation. Mandatory
Uh,
vacation means to give employee a mandatory vacation. He is not applying for the vacation. It means he is planning for a bigger fraud. For example, in bank there are cashiers, right? Who count the cash, who submit the cash into the vault, cash vault. So bank policy says that if the person is not asking for leave, he's not getting sick, he's not asking for leaves, that it means he is very much loyal to the job, and this create a fishy behavior as well. Why he is not getting vacation, right? Maybe he is planning for bigger frauds, so you give them mandatory. So there is a procedure in banks as well. Employees who work in a sensitive department, cash handling departments, they must apply for leave at least 14 days in whole year. So that is mandatory leaves beside sickness leave or family reasons leave. It's like that, medical leaves. So when you give them mandatory leaves, you can check it out. The person who worked for after him, he can say that look, he is not doing good. He has this kind of like arrangement. Maybe he is planning for big some kind of fraud, something. So by having job rotation, which means either you are working night, morning, or evening shift, you can also work for different departments as well, different branches as well. So you keep rotating the employees so that you can safeguard the business assets, the sensitive information as well. And you also sign a fidelity bond as well. What does it mean? What does it mean? So this is a bond.
I think like each of the most important employee have stock option in the company that they work for, so they can stay because within the time the interest increase, so is like more advantageous to them if they stay in the same company.
You may be right, but the fidelity bond means company, they purchase insurance from insurance company on behalf of person's caliber. For example, cashier. Banks don't know what is the behavior of the cashier because cashier come to the business 9 to 5. That's it. We don't know that whether it is this person is working after 5, he is working for some kind of like illegal activities or making a gang. It's like that. So they purchase an insurance against his behaviors. So when they purchase the insurance companies, basically they are security companies. They secretly watch this cashier and they make some kind of score whether this person is highly susceptible to make a fraud or not. So it is just like a background check on cashier. So the insurance companies, they are responsible. If this person commit a crime or commit a fraud, then the fraud gonna be filled by these insurance companies, right? So they basically investigate employee's background, whether he has a history of like some kind of arrest or not. So these kind of stuff, whether this person is suitable for this cashier job or not. So they come sometimes in like a like ordinary person. They talk about this kind of stuff. They can also sometimes call you. Okay, let's make a fraud, and they check that whether employee is loyal to the company or not, whether he has a good ethics or not. This kind of stuff. And then loss prevention specialist. You hired people, researchers who come to your company in disguise, and they just look at the situation. They analyze the situation and say that okay, there are a loophole between this time period and there may be some kind of big fraud can happen between these two times. So we need to fill that with some extra guard or some things like that. So with the e-commerce, there are now the chances of fraud is even more prevalent or more bigger. So we have viruses, right? We have stolen credit card numbers as well. You go to the company and you say that, okay, you need to swipe your card once. All the information is with you, right? So there can be a like some kind of viruses in your computer. They can hack your login and password, and they can use fictitious transaction as well. So what you can do, you can have encryptions and firewalls. You can hire a person, hire a company who provides antivirus, services, this kind of stuff. So with the introduction of e-commerce, there are extra layer of internal controls through computer softwares as well. So the limitation of internal control, cost and benefits. Number one is called collusion, which means two or more people working together, right? How we can control? By collusion, which means two or more people, they can working together so that they can beat the internal controls. Okay, you join hands with your colleagues. Let's explore this one, and we can, both, we can steal this money, and I will provide a cover for you. At the end, we split the money. Management override. What does it mean?
When you maybe use your manager to cover you.
Exactly. So it's like you override the controls with through manager, for example, is not coming. So you know that the manager has applied the vacation for advance in 30 days, and he always do that in the month of August. So you plan some kind of fishy behind his back, and you can have this join hands together or something, and maybe the person is still in the management or in the office, but since he applied for the vacation, and they both work to plan some kind of a fraud. And also fatigue and negligence can also create opportunity for the breach of the internal control. You have seen the movies, right? The security guy, he is sleeping at the job, and the thieves enter the company warehouse and steal the money, or the things as well. So even if you are feeling fatigue, something you can ask for, just cut my salary and I'm not coming today because I'm feeling fatigue. Rather, I would be in a permanent mess. Like it may cost my repute as well. So the biggest limitation for internal control is the cost. So implementing your business is small and you employ all the internal control procedures, and your cost is huge. Due to this cost, you are having loss. The controls are good, yes, but controls are expensive as well, right? So you need to see that whether my benefits outweigh the cost or not. If the cost is huge, hiring a company, installing a cameras, purchasing antiviruses and all that stuff, it has a cost. If the cost is lower than the revenue and lower than the benefits, then you can say that, okay, I should go for this internal control. Okay, let's come to the real stuff of the internal control and cache, which is design and use of bank reconciliation. We are talking about the cache. For cache is a very sensitive issue, and we talk about this, how we can just prevent the cache stealing or the asset stealing or whatsoever, which basically disturb our cache planning. If our furniture is stolen, it means our cache is disturbed. Why? because then we have to pay for the new furniture. Our cash has decreased, right? If some, employee, we hired him and we trained him, and then he left the company. So all those training cost is just a wastage. It becomes expenses rather investment. Because when you take an employee, you spend a lot of money on advertisement and then interviewing and then selecting the candidate and then training him and then you place on the job. And if the employee resign, then this is a huge cost. And of course, the cash is disturbed. And now let's talk about the bank reconciliation. Here we go. Design and use of bank reconciliation means so documents to use to control a bank account. So when you open a bank account, you have a signature card, you have a deposit ticket, you have a check, bank statement, and bank reconciliation. So who is responsible for signing the check? We have signature card because the person who write the check and the person who sign the check, they are different. So for example, salaries made by accountants, signed by the managers, right? Similarly, when you pay for the suppliers, the person who make the bills, and the person who sign those documents, they are different. So similarly, bank accounts, because the company bank account, there are tons of money inside. So salaries, expenses are going out from this account, plus expenditures are going out from this, plus different kinds of like utility bills, daily routine, cash expenses. So who is responsible to withdraw the money from that account? So there is some kind of responsibility, financial manager or something, who is in charge to look after this account. Deposit ticket means you receive the revenue and you deposit with the bank. Bank issue a slip that this slip, deposit slip, that this is a proof that this person actually went to the bank and deposited the money. The money, which how much money, 10,000 or 1 million or whatsoever. And there's a checkbook as well. So bank can only provide the person not on the basis of just for a company receipt or something. You must accompany with that receipt the bank check, right? And for internal control purposes, bank provide you the statement, and you have to make reconciliation so that you know that there is no forgery as well, or there is no, sorry, the signature card helps us that there is no forgery. So the bank reconciliation, it provides some kind of reconciliation that the money in the bank and the money in the cash deposit that is in your hand is not equal. And why is not equal? There is reconciliation. If even though you have made the reconciliation, even then these two accounts are not equal, it means there is some kind of fraud possibility or some kind of error. Well, let's talk about this. So